Welcome everyone, CryptoCam here. Today we're going to be talking about is cryptocurrency a bubble? Market analysis. There is no doubt that any stock or asset class cannot increase at a parabolic rate. Creating a 10x in return to its investors in a year is not sustainable over the long term. It cannot be sustainable, but it could just be the beginning of a longer trend. It could also accelerate before leaving off. It all depends on how you look at it in terms of previous historic parabolic moves and how these moves turned out. In a nutshell, the adaptability and acceptance of the underlying investment is the key determining factor regarding when or if the bubble will burst. As we described in our other video on how to value a cryptocurrency, anyone who simply dismisses a cryptocurrency network as having zero value probably said the same thing about other prominent networks in our history. Motorola's successful first but limited cellular phone network in the early 1980s, expansion and subsequent brand loyalty to Apple's and Google's ecosystem resulting in exponential growth of those companies, or finding value in a network like Facebook. If you do not think that a cryptocurrency has a value, then you really cannot participate in this debate over whether this is a bubble since you have already made your mind up, because you have miscalculated the utility value of an entire space of thousands of projects, many of which earn good revenue and have real sales. That being said, a new investment class cannot gain in value so rapidly that it simply lays waste to every other asset like real estate, utilities, and bonds. We will never choose to hoard cryptocurrency over eating supper or having shelter on a cold night, so it cannot expand forever. But let's look at a few bubbles from the past and see what we can learn. Here is the ultimate parabolic chart. And what is this crazy bubble? It is the gold standard for equity investing worldwide, the S&P 500. Yes, the S&P 500. Is that a reason not to invest? Heck no. So why does this look like a bubble but nobody calls it a bubble? Well, because the time axis here is 65 years long. Over that time we can get accustomed to our bubbles and find ways to explain their behavior. We come up with a systems evaluation of companies based on revenue and earnings per share and compare them to benchmarks in the past and estimate for the future. It is still a parabolic curve, but one we are able to explain. Also, things have happened over these years. The number of individuals participating has increased, mutual funds and ETFs have emerged to allow less savvy investors in, online brokerage accounts and foreign investment have increased demand, and there are more companies to attract investment. Time makes it easier to explain a bubble, but that does not necessarily mean the logic is right. And in retrospect, despite the two large dips in 2002 and 2008, the chart is still a parabola, just one that is a bit more dilated than the one that ended in 2000. Let's take another example from history which occurred in a shorter time frame. Say you bought at $2. Would you sell when it hit 8? At that time, people were saying it was a bubble and it was going to 0. Others were saying that it was going to 1,000. Who do you believe? The company was small and its future was tied up in the promise of mobile phones becoming mobile computers. This is 6 weeks later. Now how would you have felt if you sold your $2 purchase is now 7x and the chart getting volatile up there at the top? So is this a bubble? Is this bubble over? Is this no appearance of volatility a sign? Or is it just a little cruising altitude before the next run higher? Now we are 8 weeks later. Now mind you, 2 months is not a blink of an eye, like it seems in the cryptocurrency space. That volatility gave way to another huge run higher. Your investment is now a 10x, and you see the volatility is coming back soon. Is it time to get out? Remember, Bitcoin did a 10x in 2017, and it took a lot longer to do so than on Qualcomm stock. Also note that the first parabolic move circled on this chart looks like a tiny bit of noise in a bigger picture. Now let's move ahead another 13 weeks. Here comes the crash, right? Nope, your initial investment is now at a 27 times, and all of your other parabolic moves look like linear, orderly marches higher, when at the same time they were all called bubbles. See, all of the bubbles named callers got it wrong, and each and every time, because you never know if you're in a bubble at the time. You have to always assess the market's behavior and constantly calculate the utility of the product. Did the product always have utility and was it never priced fairly, or was the product slightly undervalued and rapidly gained in utility while investors caught on but still lagged behind? Nobody knows when you're in the middle of it. You only know one thing: it cannot go on forever. Or can it? like the S&P 500 over 60 years. Now here's a chart over the next 12 weeks. There was still another double to be had, followed by a period of sideways consolidation and two-sided trading for a few weeks. Notice that this bubble did not burst. Parabolic charts rarely do. They melt like an ice cube on a warm day, but they do not burst and show a symmetrically shaped decline. This sideways two-sided market was a sign. Investors were agreeing on value. During this time, the assessments of value it took place, and some consolidation patterns like this go higher, and some go lower. But there is time to sort this all out. The bubble does not just burst while you're sleeping one night. Finally, over the next year, we have price discovery with the ultimate resumption of an uptrend that is shallower than the original parabolic rise. Note again, the initial bubble calls happened in the tiny circle when price went from $2 to $6. So the key takeaway here is that if you're going to invest in cryptocurrencies, remember a few things that makes this space so volatile but such a great opportunity. First time moves a lot quicker for crypto than for Qualcomm or the S&P 500. These markets are worldwide and trade 24/7. The ability of information regarding these projects spreads quickly online. So how do we know where we stand? Well, anytime you examine the chart of one cryptocurrency, you need to also look at the cryptocurrencies version of the S&P 500. That is the total market cap graph. Anytime an investment class has more inflows than outflows, it is pretty easy to see capital appreciation in most projects in this space. Sure, some will work better than others, but if the entire space is growing, the bubble is nowhere near maximum size and the sun is not shining relentlessly on that ice cube. The market cap can be found here, clicking at the top of this page, coinmarketcap.com. Here is a chart for one time frame. The two corrections were short and recovered quickly. When this much money is entering a space, it is virtually impossible not to make money. In fact, it would be difficult to choose a losing portfolio. You can only hope you made enough good picks to have achieved a double or more and have the ability to take your initial investment off the table. Although, with a chart like this, it does not look like there will be a major crash or correction. Now here's the global market cap 2 weeks later. At this point, we see a leveling off of the two-sided market and as much new money is leaving the space as is entering the space. The question is, are all crypto projects here fairly valued, or is this just a pause of profit taken by investors who have already had their own 5 times or 10 times early in the year? Surely if this was a bubble, we would see a symmetric drop in market cap that mirrored the rise, and that is clearly not the case right now. In summary, we can profit from a parabolic rise if we can truly see that the value of the product that is represented by that parabolic graph. When value is underestimated, the trend continues. When value is overestimated, then there is a two-sided action and correction. The better you understand the product and its value, the more you can profit from it, as its gain is acceptance. Remember, cryptocurrency investing and trading carries a significant amount of risk. You could lose your entire investment. Fast Crypto Coins is not a registered investment advisor. This content is for educational purposes only and does not constitute investment advice, nor should the discussion of any coin be considered a trade recommendation. You must do your own homework from multiple sources regarding any cryptocurrency investment. Please note the date of this video, since the cryptocurrency environment can change rapidly without notice, and elements of this video may be extremely time sensitive. This video is considered current only for the date it was posted. Stay tuned and check out for other videos on how market analysis and potential catalysts to look for that could result in a correction of this market. Thanks for watching, everyone. Make sure to subscribe to get notifications when a new video is posted. Follow us on our Twitter and stay up to date on our blog. Take care, everyone. Thanks for watching.